The rise of retail investors is something we cannot close an eye to. I mean, Wall Street bets, Reddit, GameStop, AMC, what have you, right? When retail investors band together, it shakes the market and sends tremors. So our guest for today is here to help us understand where he sees the future of retail investors and point out some of his observations in this new wave. We broke down multiple personas that he sees on his platform and recognized that, hey, not everyone wants to be a long-term investor. There's actually a sizable group of retail traders out there today. So whether you are a technical only or fundamental only investor, I have some good news to share with you because I think we can learn from both sides. So all these things will be discussed today. Stay tuned. Welcome to another Chills with TFC session. In this series, we hope to bring out interesting, relevant people to help us learn better from various perspectives. Life is not always about learning from people that you already agree with. Perspectives shape a rounder thinker. So in our pursuit of the life we love while managing our finances well, our guest for today is a veteran in the financial space. With 15 years under his belt with various brokerages, he has actually seen the scene evolve and is now leading the team at FUTU Singapore, which has created the now locally famous Mumu trading platform. In 3 months, can you believe it? In 3 months, the Mumu app has racked up over 220,000 users with 100,000 clients who have FUTU SG securities accounts with deposits. Essentially means there are quite a lot of people that actually put money and are starting to invest and all that jazz. So shout out to all of you. We will also be talking about interesting features that they will be rolling out as they keep driving down this path of enabling the retail investor with technology-driven features and resources. Today's Chills with TFC episode is sponsored by Mumu, hosted by me, Reggie, and I am happy to introduce you to Gavin Chia, Managing Director of FUTU Singapore. A lot of investor behaviors are changing these days, right? Like retail investors, sometimes I don't even know whether I can call them investors because they're more like traders. Okay, like a lot of traders
make a lot of trades in a day.
Yeah, they make a lot of day trades. You know,
Yes.
they form blocks together in Telegram or like
Yes.
whatever social platform.
Bingo.
You know, and even you guys, your platform has a lot of social activity there also,
Agreed.
right? So
Yes,
all that
correct.
jazz, and you are seeing the power of retail investors coming together, right? Whether is it like Wall Street bets or like all the subreddit, GameStop,
Reddit, yes,
AMC, and all those things. Is it changing the way investors play this game? Is it gonna change the market in general? Or is it just, a small bunch of people playing around, doing their own thing, So it's like, is it an anomaly or is this gonna be a trend for the future?
I think for me, this will be the trend for the future. First of all, I will touch base with something that's very close to us, which is education. If you look at the education right now, whether you're in poly or whether in uni or even in some of the different countries itself, you will have courses like, how to understand the financial ratios. Or even some of the courses will be more on analytics. Nowadays you have a lot of big data courses in university, part-time, full-time, or upon graduation you can join. There's certain courses that were skewed towards cryptocurrency. There were certain courses that were skewed towards coding for trading. How I got to know about it is because I just graduated recently from NUS. Yes, and I started to realize when I talked to some of my friends, whether from China, India, it became a very common thing. And they are so much younger than me. They are like in their 20s. I was the oldest in the class. So things are changing, and with this, I don't see there's any other changes. I got to say, in terms of the causes, in terms of the things that they are exposing, it has really evolved. I still remember when I was like, studying in the Singapore uni 20 years ago, or maybe more than 15, 18 years ago, things are very rigid. You just listen to the prof will give you some tips, you'll pass the lesson. But in terms of financial independence, in terms of educating you in terms of the different products, I gotta say, as compared to now, it's so much more common. Even for the school itself, 18 years ago, if I'm curious about something, especially in terms of investment, in terms of equities, I gotta go internet. But if you look at it, there's a lot of, you don't know whether is it true or not true. But you see, if you come to right now, rewind forward, with those fintech brokerage, even for us itself, we equip clients with so many information inside. That some clients share with us, it has gotten a little bit too much. Yeah, too much. So it's a bit different. And how I foresee, the younger group will be a force to reckon with.
So you think that because of all this empowerment of all these retail investors coming into the game, is really fundamentally changing markets? You know,
Yes,
because
correct.
I have talked to a lot of people, and some people think like, yeah, retail investors, and how big are they? You know? And some people are like, no, actually, retail investors, if they leverage up, they can be quite a big group also.
Yes.
I mean, you see some of these companies, AMC just milked the whole price increase, right? They were like, oh, if you're a shareholder, I give you free tickets, do this, do that. You know,
Sure.
so you see the change, and it's not unique to AMC. I mean, there are a lot of other companies, whether it's some steamboat company or whatever. I mean, I don't want to
Okay.
name names, but it's been a strategy for a lot of these companies that are more retail facing, retail customer facing, to get people to buy their shares, be invested, and all that, right? So it kind of props up a certain base. Because instead of having institutional investors as the base, now you can actually have retail investors to be your base, you
Yes.
know,
Agree.
for to
Agree.
hold your company, right?
Agree.
So
Agree.
is that gonna change markets in general, or is it just gonna be some sector? You know, do you guys have some thoughts on this?
Yes, I mean, if you look at on our side, just to share a little bit of statistics over here, our Gen Z clients has been growing exponentially. Exponentially, and you will be surprised the type of question that they're asking. They really know their stuff very well. I believe as much as we talk about education, it's also the easy access of information right now to this group of people. And last time I believe there's a lot of talks about which stock to buy or what, and you'll be surprised by this younger group of people. They know what they want, and some of them, when I spoke to them, they are talking about early retirement. And one good example is if you look at the transfer of wealth. I mean, just to cite an example, 18 years ago, or even when I was in uni, I remember I read a textbook that's, one of the prof even encouraged you to buy Pepsi so that you can give it to your son or daughter. That's how they transfer their wealth. You know what I mean? But if you look at nowadays, you look at cryptocurrency, for example, people and the younger groups of people, they have become millions or if not billionaires. If you look at Bitcoins, there was, if I still remember, there was some campaigns for Bitcoin in 2010 where they used like 10,000 Bitcoins to exchange for a pizza. And just imagine you have 10,000 Bitcoins right now.
Shout out to the pizza seller.
Yeah, I mean, so just imagine, I mean, right now in terms of the transfer of wealth, is that the traditional way, or rather the old way of you buy a shares, you hold for 10 years, 20 years, and hopefully Coca-Cola, Pepsi will grow, and that's where your wealth, and as what is compared right now is very different. I mean, I got to say it's partly is because of COVID-19, the pandemic. More of them are at home. The time spent that they can read through information, news, the accessibility of that. Yeah, I mean, another interesting part that we observed was, people start embracing technology. Because there's a huge acceleration in terms of technology, in terms of what people want to see, because of them staying at home. And I got to say, that's where when we talk about FUTU or even some of the competitors, especially there in the fintech, that's where we are all in the right track. There's so many things that we can make it even better, faster, just embracing technology.
So are you trying to tell me that there is a big shift away from the traditional buy and hold long-term investor kind of thing? Because that is still the predominant content market that I see out there in the personal finance space.
Yes, I mean, I can't really comment, in terms of whether, there'll be more people buying long-term, or, there are more traders that people buy and sell. But what I can say is that, there are some people that hold these two strategies together. Longer term, maybe they are looking at REITs, something that is stable. They build a portfolio. I got to say, it's very interestingly, people have been coming to me to say, what is the best portfolio? I got to say, when I was talking about portfolio, that was like, when I first started out in this line, when you talk about portfolio, that's where portfolio manager will comes in. But nowadays, people, the younger ones are talking to me about portfolio. They have certain amount of money that they would like to put for long terms. It can be bonds, it can be REITs, it can be something that is longer term. But there's something that they are using for more speculative, that they want to have in their portfolio. Other than this scenario where this group of people, there are some that are more on the both extreme end, they buy and hold. And, there are some who actually trades
speculative.
But just my own 2 cents worth, my own personal thoughts. Market has been very volatile. Who would know that because of COVID-19, it actually affected some of the sectors, and some of the sectors benefited because of COVID-19, and no one really sees this.
Like, what kind of advice would you give some of these like younger people, millennials or Gen Z? Millennial not very young already.
No problem. I'm millennium. Okay,
so
millennium. Yeah, sure, no
millennials
problem.
or Gen Z coming into
Sure.
the space, and they don't really want to do the long-term investing kind of thing, right? So maybe portfolio construction, you got a core satellite structure, right? You got
Correct.
more, broad-based, longer term on one side, and then there's the other side, which is a bit more speculative.
Sure.
What kind of advice do you have for people that are looking to construct portfolio like that?
First of all, when I was talking to some of the portfolio manager, there's always one word that they will always be using. That is backtesting. Okay. So my advice to this group of people is, yes, you can construct your best portfolio, but look for a platform. Even for FUTU, we do have paper trading that allows you to do your portfolio, your backtesting.
Wait, so what is backtesting?
Your backtesting means for every portfolio you constructed, you can actually put it into a testing environment where you won't have to put your real money inside. So with this backtesting, you will see your return, you will be able to see the results, and from there, you will know whether it's good to put it on the real market. So this is where sometimes you will add in, you will take away some of the counters or portfolio. So you will try your best to construct something that will be good, that will be better, or maybe there's a certain percentage of returns that you are looking for. So this is where I got to say, my advice is look for a platform that is able to allows you to support in terms of backtesting. Next thing is always be hungry for information. As compared to institutional, if all of us think of institutional, you'll be thinking that they should have 6 screens, 8 screen, 9 screen. So you see, I mean, why do they have all these screens? And it's because of the information that they need to piece it up at this moment, at this time, or maybe see a certain.
What kind of information matter then?
Okay. First of all, I think it's very important to understand the fundamental of the companies. For me, if I put it in terms of my personal approach, it's always a 60-40. What do I mean by that? It's always a 60% fundamental, 40% technical. So if you look at your institution, you'll be seeing them looking at graph, but you will be seeing them looking at Bloomberg. So, to me, knowing the company is very important. Even knowing the management or even the style of how they work. Fundamental, it can be ratios as compared to your competitors, or even in terms of knowing who are the major shareholders who are inside. These are all good, important information. Or year on year for the past 5 years, how are they growing in terms of their revenue? Sometimes even you look at the fundamentals, you will see suddenly a surge in terms of profit. Is it a one-time gain where they sold off certain assets, and that's why you see a huge one-time gain? So these are things that fundamentally we all got to be very sure, or rather is something that we can take in comparison, or even in terms of PE ratio. If the industrial average is like 20 times, and this company is like 200 times, you get it. It is some. So
Growth.
Something. Somehow it may ring something. So this
fundamentals matters.
Fundamentals. So if you look at technical that will be.
By the way, I just want to add for
Sure.
the Bloomberg, for people that don't understand what's a Bloomberg, right? Actually, the Bloomberg terminal is quite a wonderful terminal, and all the institutional investors, they use it.
Yes, correct.
So all the information is there. They do a lot of deep dives, and but these days information is getting more open.
Yes, sir.
So you can search for a lot of these platforms. We'll not name them here, but there are a lot out there. Then you pay a fraction of what people used to pay for Bloomberg.
Yes.
But I think Bloomberg still does a lot of the modeling.
Yes, correct.
So they
The
do very
modeling.
complex modeling and valuation structures, and premium premium version. But at the least, I think like what Gavin has pointed out, information has changed. So it's not about signing up for Bloomberg, but
Yes.
it's really about recognizing that fundamentals matters.
Correct.
Even though you're a trader,
Yes, correct.
don't take extreme ends. Is
Yes,
that
don't take
kind of
extreme
what
end.
you're telling me?
Yes, and of course, for me, it's always technical, and technical is always looking at the price, the price movement. We need to have a gauge on what has happened in terms of the price movement for the past 1 year, 5 years. Sometimes 10 years is a little bit too far for me, given that things are so volatile nowadays. So 1 year, 5 years, or even the near few months, or even some of the interesting part is you will start to track some of the price movement was because it's very near their announcement, or some counters will move after their announcement. So these are all the different characteristics, whether from technical point of view, fundamental point of view. It allows you to paint a picture, and it will give you, personally, at least for me right now, it paints a complete picture. But I know there's both extreme end, fundamental will look at fundamental, I don't really care about technical. There's always a huge debate about these two. Technical is always technical, fundamental is always noise, there's always a huge. But my style is always a hybrid about using these two sides. So
and we interview a lot of people, so we know. Everybody got their own views, right?
Yes, yes. So for me, how I look at it is, I totally agree with you. I mean, in terms of the assessing of information, it's no longer from just from a source. In terms of assessing, in terms of the accuracy, in terms of the cost, it's so much different right now.
Yeah. So from a technical standpoint, right, what are some of the things that specifically you think are better, to look out for? Is it moving? Are we talking about moving averages? Are we, what are some things?
It really depends on each individuals. Sometimes for me myself, I look at just a simple moving average. Some of them will look at 50 days, 100 days. I rather cut it to 21 days or even 30 days. This is of course just one of it. I'll look at the RSI, relative strength index. MACD, that there's many different indicators.
Yes.
So, but generally, these are just the basic one that I believe as investors, it's always good to know, good to have, and that's where I believe it will help in terms of your trading journey, and even simplify your trading journey.
Yeah. Okay, that's good. I think technicians, there are all sorts of ways. Okay.
Different ways.
Go out and search for it. I'm not a technician, but I know some technicians, so I kind of get a little bit of it, But going forward, right, if you guys as a platform, you are seeing more people trading, right? You're seeing more price action, you're seeing more movement, you're seeing more people buy, sell, all that, whatever language you use. How are you guys ensuring that these guys don't go bust?
Very good question. This is where we talk a little bit more on the risk side.
Yes.
Okay.
Because you also got to manage your bottom line.
Yes, our risk, and of course for clients itself.
Yeah, important,
yes, agree,
right?
Agree,
you are a broker.
Yeah. So for us, for those who are aged 18 or below, they will not be able to open an account. And even for those, we do have margin facilities where clients can do leveraging, but the max leverage was actually up to 2 times. Or even there's a cap of 50,000. Yeah, so you see, this will only be open for clients. I mean, there's an age point of view will be above 21. So what I'm trying to say is, for those from 18 to 21, there will be no margin. For those who are unemployed, will not have margin. That means what do I mean by not having margin? Means for every $1 that they put in, they will be able to trade up to $1. So it's all pre-funded account. So it's a little bit unlike to the more traditional brokerage where they call it the cash account, where maybe based on your pay slip, I will be able to give you a limit, a trading limit. So it can be 20,000, 30,000, 50,000. It really depends. It really depends on the reminders. It really depends on the company. But for us, just to manage the risk better, in Singapore, we only allow clients to trade. Mostly how much they put in. Of course, some clients would have requested for a larger margin. It's all case by case. We are running through very closely, very strictly to make sure that at this time we are also taking care of clients in terms of the risk point of view.
So what was your margin cost at this point in time?
Margin cost, right now currently we are looking at anywhere from around the 3% to 6% per annum. Okay. We are trying to bring the cost down, and we are trying to work with more banks, and yes, we will bring this cost down in terms of the interest rate.
Really?
We will.
You gotta bring transaction costs down, and you're gonna bring margin
interest down.
Then
yes.
What is your business model? How are you gonna 赚钱?
Good question. I think for us, if you look at our model, is very interestingly, we right now currently, if you look at our daily active user, it's actually more than 1 million a day in terms of clients who are accessing into our platform, clients who are trading. We feel that cost, of course, is always a bottom line for all brokerage.
Yeah.
It's just setting out a shop. I mean, in terms of cost, all firms, all companies, all shops will have a certain cost. Then that's where we talk about profit margin. For us, we would want to bring investment, to be made easier to clients and also convenient to clients. So for us, with technology, the interesting part, we actually cut off a lot of costs by embracing technology. So that's also one of the reasons why we can keep our costs low. Okay, and of course, like what I shared, we really hope to bring this technology or even the platform, the convenience, to all clients around the world. With this model, I got to say, we are still doing very well.
I totally get the part about like leaning down your processes so that you don't really, have a lot of overhead, right?
Overhead, and the interesting part is clients will be able to feel it straight away. For example,
In what
if
sense?
they want to fund their account. I still remember when I need to fund an account, I need to do a TT. But nowadays with technology, clients will be able to fund their account in 15 minutes. It will be reflected up there. And no longer a time that last time I need to, some of my friends will need to call their reminder on the amount that they need to fund, and maybe it will be reflected 1 to 3 days later. For us, yes, I mean, we may have shared with clients that, hey, your funding will be ready 1 to 3 days, but a lot of clients will know that, once they link up with their DDA, which is the direct debit authorization to us, just a one time, for all funding coming in, it will be cited in 15 minutes. So for withdrawal, right now we are also trying to enhance this technology to make sure that when clients withdraw, it can also be done in 15 minutes. So this actually cut off a lot of overhead costs, a lot of human intervention, and a lot of time with this technology. That's where it brings a lot of convenience to clients. Yeah.
So I think technology empowerment is one thing. Trying to help all these retail investors is another thing. Making money is also another thing, right? There's a lot of nuances to this thing, and ultimately, I think if you guys really want to know Mumu's model, just can read their financial statements. It's the company. You can go and see everything, what is going on, what is happening inside, right? From an empowerment standpoint, right, you are taking a lot of what institutional investors used to have to empower the retail guy, right? So you give them all the information, the technology, all these things that they have, right? But how do I use it? As a retail investor, I all this information coming down. How should I really use this thing? What are some institutional knowledge, that is more prevalent today that we can all adopt, or some interesting models that you've observed that retail investors can really consider rather than just the DCA or just the PE ratio. Those things are there. But what is different now?
Like what I previously shared, if you look at for the past many years in Singapore, a trading platform is always a platform where you buy, you key in your password, you sell, you key in your password, you withdraw, you key in your password, and that is the main function of a trading platform. So now I got to say it's very different, and I got to say when right now we have clients, they did feedback that it's getting more and more complex in terms of how they're going to maneuver our apps. So what we are coming out, or what we had prepared, is we are launching many education or even seminars or even clips that allow clients to understand the usage of our Momo apps in terms of our trading platform. And yes, you are right. And some of the informations, if you look at it, it can be institutional, and it was sort of branded as maybe belongs to institutions, such as even certain things when I was once a dealer. Looking at market depth, interesting part is for the US market, we allow clients to see up to 40 levels of market depth. So that means for 40 levels of pricing, you are able to see the demand and supply. So what do I mean by demand supply? You are able to see how many people are, or rather, can't really see how many people, but you can see the quantity in terms of people, people has been putting in terms of the buying and also on the selling. And how do you recognize, is there a buy, that is more, or selling that is more? And how do you know more about that? And we have this in terms of capital distribution. we have this interesting over in Mumu, where if you look at the capital distribution, very interesting because we are able to capture or we differentiate funds, big funds coming in. So we label them as XL, and followed by L, and followed by M, and followed by S. So if you look at S, it's generally a lot of retail clients coming in. They buy in small, they sell small, and when you see XL, then you start to realize, boom. And in that ring itself, you will be able to see the calculation in terms of capital inflow or capital outflow. So with this itself, you will be able to know with a capital inflow, that means you can say that there's more buyer than seller. And people are coming in to buy more than people who are selling it. And when you see that there's a huge capital outflow, that means you will see a lot of seller. And, this is where for a trader or for someone who is trading, they will know that if there's a lot of people who are selling, so for them, they will queue lower in terms of pricing. Or unless they sense that there's huge potential to the clients, really depending on clients, they will want to buy straight away. Yeah, but if I'm someone who is taking profit and, I see a huge capital inflow, then my point is, why want to wait a while? And this is where the capital distribution allows me to see very clearly. And very interesting, if you look a little bit more below over on our Momo apps, you will be able to see that it's actually in the graph format. We track this XL, L, M, and S in the graph format. So you will be able to see them crisscrossing each other, or if not, you will be able to see the graph, how it's moving.
So I don't get to see the exact capital size in and out, but I can see who are the big fishes moving. Is that
Yes, and you can see the totality in terms of capital in and out. There will be 20 million, there will be stated 20 million inflow, outflow. So this is where it paints the story in terms of you will have a good feel about how things are moving. And, that's how we bring the information and we make it very easy, we make it very colorful, we make it very clear. Some clients also, they are not so much on a technical person. So sometimes they may not know what is a good price to go in or out. So we do have, if I remember correctly, there's this position price distribution. The average in terms of, the average pricing, in terms of the selling price, in terms of the buying price, all these are based on the data. It's all calculated over there. And this is where clients will have a good feel about, at what price are they going in or not. And all these are all calculated based on the pricing or the trading price on that day, on that counter. And this is where it also allowed clients to. I don't say it means that we got to go in at this price.
It's not a miracle pill.
Yes,
okay? Yeah.
But it's a good indication. How you can look at whether whatever price you are queuing, is it going to be is too far away or is too low or So with this itself, with the market depth, with all this information, it gives a good picture about the stocks, that the behavior, the
what's happening,
the pattern,
right?
what's happening. Yeah.
Okay, that's cool. That's interesting. But then, as a retail investor, right, people got all sorts of weird things that they do. In a sense of, the more toys you give them, the more interesting things they will come out with.
Of course.
Or they will interpret it in a very different. Like, okay, maybe I should say we will interpret it in a very different fashion.
Sure.
Because I mean, professionals are professionals for a reason, right? They're trained, they're disciplined. At least that's what I hope, lah. Okay,
Yes.
that's what I expect.
Yes.
But as a retail investor, you give them more toys, more interesting things happen.
Sure.
so I think we want to take this chance to call out some of these habits, or some of these things that you feel you observe within the community, of retail investors. Some things you think we should let everybody know. Hey, maybe this is not the best way to do it, and just kind of give people some warning, lah, in that sense.
When it comes to a more complex platform, that's where things got a little bit more confusing. And where things got a little bit more confusing, you're right, everybody interpret information differently. And so this is one part I like to share with clients, is that be very open, and we are always there to help. On FUTU itself, we are also doing our best to come out to roll out a lot of live seminar, come out with a lot of small YouTube clips that helps clients in terms of answering some of the common inquiries that they have. Yeah, I mean, I got to say, regardless of age, open to learning, ask more, learn more, and for us, we will always be there to help more.
Okay, that's cool.
Yeah.
That's cool. So going forward, okay, you guys are launching a lot of new features. You're trying to do a lot of new things. Maybe just give us some interesting juices. Like what is gonna come out from you guys? Like what are new features, new products, new things that you guys are developing?
Okay. Right now, I got to say some of the interesting things that we are coming out is we have expanded the markets the equity markets that we have. Clients will be able to trade the A shares. A shares will be sometimes the Shanghai and the Shenzhen connects. Some of them will know that you share them the connects. They'll know that is so we are actually opening this up.
Okay.
And this is allowed clients to have access into the China shares. And if you look at it, we see there's a huge interest in this. Some clients has been asking because they see the huge potential in China. In terms of technology firms, in terms of the different markets that they have. And a lot of us will know, if you look at Shenzhen, there's a lot of small tech firms. So that's where we are launching this. And we also know there's a lot of clients that are very keen in terms of options. And we recently launched the cover options. So clients, in terms of trading options, this is something that I got to say is among the whole Singapore, it's only FUTU that we launched the cover options. And with these cover options, clients will be able to, in terms of risk approach, will be able to protect their portfolio a little bit more, rather than just going into, buying call or put. Yeah. So with this itself, we had also launched that. In terms of more products, surely we are looking at more other products, and we want to bring that convenience to clients. In terms of technology, in terms of improving the platform, one of the things that I shared was to actually allow clients to withdraw their funds in 15 minutes. Yeah. We also want clients, to have a better FX conversion. If you look at the interesting part right now, as compared to a more traditional brokerage, is that we allow clients to convert their currency in the Momo apps. So it's a little bit different. I mean, if you look at a normal local brokerage, it's normally you will call a remiser, they will give you a fixed rate, that will be a AM rate or a PM rate. So there will be one rate. So there'll be in one day there'll be two rates. So, but we don't. I mean, we empower clients, depending on the volatility of the currency. Clients will be able to exchange it on our Momo apps. So clients will be able to benefit if let's say there's a weakening in terms of US dollar or strengthening in terms of US dollar. All this can be beneficial to clients depending on whether they want to buy or sell the currency itself. So for us, clients will be even to see even a better spread, even a tighter spread. It's not that right now we are charging a very big spread, but we want to make it even better for clients. So these are things that right now currently we are working at, and we will be able to update clients soon.
Pretty cool. Wait, last question.
Sure, please.
About cover calls,
Sure.
about cover options.
Yeah.
You selling cover options essentially means like instead of me having to open two options and pay double contract.
Yes.
I just pay one time.
Yes.
And I can get the multiple feature that
Yes,
I want.
correct.
Okay. You guys really doing a lot of interesting things.
Yes, I mean we are hearing clients, and we want
Yes.
to we hear them, and that's where we want to help them accompany them in their investment journey.
Okay, great. So for everyone that don't have a Momo account yet, they should sign up.
Yes, please.
Okay, thanks for joining us today. Thank you.
Yes, thank you. Thank you.
Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the Financial Coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. Join our community Telegram group, follow us on our socials, sign up for our weekly newsletter. We are doing a weekly newsletter reboot. We're going to have a lot of information within the newsletter. Everything is in the description below. And if you love us and want to help us grow, definitely share the podcast with your friends and on your socials. Also, if you have any interesting thoughts you want to share, or you know someone that we would like to hear from, reach out to us through hello@thefinancialcoconut.com. With that, have a great day ahead. Stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all. We have 3 questions that we ask everyone.
Sure.
It's just a standard question for every single guest, not
problem.
as finance related.
No problem.
Just share your perspective. Okay.
Sure.
Number 1 is what is a core life principle that you hold closely to?
something that I hold very closely, even right now today, is always learn. I mean, it's always to learn as much as possible. Okay, reason is, with this era or even before that, every day things are moving so fast. And for me, myself, even right now today, I'm learning something every day. My ethos is always to learn as much as possible and make it a different day every day. And with this, that's why with all this experience that I accumulate and also the knowledge that I have, I hope that we can value add to clients, or even for me myself is to value add in terms of me myself, because I'm always curious about many things. Interestingly, for me myself, I never graduate from with a financial degree. I graduate with an aerospace degree, so aeronautical. So with this aeronautical degree, it's because I took this up partly because I was so curious about aeroplane. And thereafter I was so curious about how financial people works. I look at movies. You have the traders, dealers. So many things. And even right now, for more than 15 years in this line, I'm still learning. Yeah, I'm still learning every day.
Okay, that's good. Number two is, what is a personal finance advice that you feel needs to be further propagated?
Of course, learn as early as possible. I mean, market will always be moving, and there's always be ample opportunities. Especially you look at such a time right now. There's so many opportunities, and sometimes with all these opportunities, learning, understanding, or having access to the correct information with the correct company or with the correct source is so important. So to me, learn early, and there will be all the helps, and there will be many firms that will be there to be able to assist from there.
Cool. Okay. So then, which part of your life are you giving additional focus on now?
I got to say, so right now, it's work. Work. FUTU right now, FUTU Singapore was launched officially 8th of March. And I joined FUTU somewhere in October, November last year. Busy in helping out in setting up the office. After that, enhancing the platform, and thanks to the support of all clients, I got to say, we managed to gain a huge traction just solely in Singapore itself. Just in 3 months, we have more than 100,000 paying clients. So for me, at least on this part of life, is how to pay back to clients, or rather contribute back to clients in terms of enhancing their investment journey. And trying to make it even a better platform.
Cool. Thank you. Thank
No
you.
problem.
Appreciate.
Thanks a lot.
Nice.